Be Wealthy and Smart, episode 1254.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the fact that bearishness is at an extreme level. Now, I don't even remember seeing it at this level last year, although it must have been during the bear market. But the Fear and Greed Index is at 17 out of 100, which is extreme fear. We have different levels on this sentiment indicator. On the left-hand side, we have extreme fear, and then neutral is straight up, and then greed is to the right, and extreme greed is to the far right. Well, we are almost as far left in extreme fear as you can be. That is a contrary indicator, which tells me we're close to the bottom of this bearish pullback that I've been warning you about and saying in several podcasts and in my emails that we would have a pullback in October that would be sharp and scary, and then we would start an epic bull market in November. And that's what we're seeing right now. With this bearishness at extreme fear, that tells me people are panicking, they're throwing in the towel, they're giving up, they're going to cash, they're afraid that the stock market is going to go to new lows below where we were last October. And I just don't see that setting up at all. In fact, when I look at the chart that is the weekly chart for the S&P 500, it looks like we are almost at the bottom of this pullback and that we are going to probably touch the 50-day moving average. But what really excites me when I look at this chart of the S&P 500, this weekly chart has a very clear cup and handle formation, which is a bullish formation for the future. It shows that the left side of the cup was in January of 2022 at the peak of the market. Then the bottom of the cup was around the two low points last year, around June and October at the final bottom. And then we've come up and formed a right side, hitting a nice top in mid-July. We had a little bit of pullback and a bounce in September, and now we're having a bigger pullback to what I think is the 50-day moving average line, and then we will take off like a rocket. This is what I'm seeing in the markets. This is not something that you have to be afraid of. We are not going back to the lows prior to last October. Quite the contrary. To do that, we'd have to be quite a bit more bullish in order to pull back and continue to drop. But sentiment is so bearish right now, what it's telling me is that we're close to the low and ready to make a turn. Now, part of what's causing the market to drop is the Fed's jawboning. So basically, the Fed, just by what they say, they can move interest rates up or down. When you're talking interest rates up, sometimes the Fed will do that in order to support and strengthen the dollar. Now, the dollar has been on a very strong upward trajectory since about July 17th. And I think where we are is at about a peak level for interest rates. I'm doubtful that the Fed is going to be able to raise interest rates next month. I think what's going to happen is they're jawboning right now, and there's information coming in that inflation is lower, that the job market is weaker. We're going to have economic information come in. Certainly the housing market is horrible, not because it's weak, it's strong, but because banks cannot loan any money. Therefore, the banking system is having issues. There's layoffs across mortgage departments at banks. And we're going to get some information that's going to be such bad news that the Fed is going to have to lower interest rates. My projection has been into early next year, we start to see the Fed bring rates down. But I think with this jawboning, it's a temporary measure. And once they're done with rates peaking here, rates are going to start to decline. And once everyone figures out that the Fed is not going to be able to raise rates again, it's going to be off to the races for the market for the next 8 months. This is going to be a very strong rally because a lot of the money that has been moved to the bond market in the hopes of getting higher yields will come back into stocks once they realize that the Fed is finished raising rates. It's going to spark a massive bull market rally. And it's also going to give a window for the IPO market to come back stronger as well. So hang in there. We're just about done with this correction, I believe. And we're about to see this market turn in a way that's going to surprise a lot of people. Now, we could have another week or two of this, but we are at such extreme sentiment levels that we might even see the turn after this week. So if you're already invested in the market, sit tight. I believe everything's going to work out just fine. And we're about to start a very exciting trajectory in the market with this cup and handle pattern that is extremely bullish, and it's going to ride contrarian to this extreme fear for a while because people won't believe it. A lot of people will stay bearish, but the market is going to be so strong that it's going to surprise a lot of people. And as for the housing market, I'm still very bullish on the housing market. Again, I'm reiterating, I don't believe the housing market can crash when you don't have inventory. Inventory levels are at about 25-year lows, and that means there aren't enough homes for sale. That's not when markets crash. Markets crash when there's too many homes for sale and everybody has to reduce their prices to entice buyers. Right now, there's not enough inventory and there's more buyers than there are homes, and that's keeping the housing market up. Of course, not all markets are the same, and certain markets are going to be doing better than others, but I don't see a crash in the housing market this year. And once interest rates start to come down, the real estate market is also going to go crazy with bullishness. Prices will rise, more people will list their homes as the multiple offers come back when interest rates come down into a more affordable range, and everyone who wants to buy is going to speed up that process and buy sooner than they wanted to when interest rates become more attractive next year. So hang in there through this scary time. This is just a bumpy ride right now, but we're about to see very exciting times ahead. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.